trade constantly, aren't they? They're going to try and trade constantly. So, and what Charlie's going to be doing is looking at the euro, and he's going to be looking at the overall shape of the other markets. Charlie was always looking at things like the Japanese yen, the dollar. The Japanese yen and the dollar was a constant reference for anybody that was in the bond pit. It always has been, it always will be a constant reference. Of course, if the dollar's moving, the bond will be moving. The spread trade between the two. So obviously, when you're looking at something like the 6E contract, you may be looking at something like the dollar yen, and you're asking the question, what's the dollar yen doing? Is it upticking? If the dollar yen is upticking, what does that mean in terms of a possible trade opportunity for me? So you go into this and say, right, I'm seeing some buyers coming in on the dollar yen. I'm seeing some buyers, and what I'm going to do is I'm going to offer a contract in this euro, and I'm going to offer some 47s. I'm offering some 47s. I've offered to sell one at 47, right? So you've offered to sell one at 47. You've offered to sell one at 47 and a half, one at 48s. So you're offering to sell one at 47s, one at 48s, and you're trying to take advantage of that. And obviously it's up to you to now look at it and say, right, well, we've now got $12.50. I'm going to bid one down at 46s. And that's sure you've got your $12.50 into your account, right? So that's what Charlie does. But now he's flat and he's no use to anybody. So people like Charlie, the locals, they'll say, right, well, what can I now do? What am I now trying to do? Right, I'm back up at 48s, 49s. I'm going to offer a couple of contracts up here. I'm going to sell two at 47s, 48s, 49s. I'm going to try and sell. Damn it, we've missed those prices. What am I going to do? I'm going to try and chase them, or am I going to wait? I'm just going to put a bit of two-tick back pressure in here. So Charlie would start offering some. Charlie would offer to sell one at 48s, one at 48s, one at 48s, and it's trying to get business done at one at 48s. And then if he pays 47s for one, he makes a tick. He makes a tick profit, doesn't he? So what he's trying to do is he's trying to sell ones or twos up at 48s, 49s. He's trying to get into a position here, and what he's trying to do is he's trying to flip it round at 48s. He's trying to flip it down. So he starts bidding. He starts shouting. One for 47, one for 46, one for 45, one for 44. He's trying to get into a bit of a buyer opportunity in here, and he's trying to make that little bit of cash. He's trying to capture that little bit of spread, and now he's in the right position at the right price again, and he's making more money, and he's taking some profits, or he's letting it roll. He's letting that trade roll. He's now up $50 on the open position on that one, and he closes off his position, and he's ready to go again using that process. Now, if the dollar is still bid, then he's going to go again, he's going to go again, and he's going to go again, and he's going to keep going again into that phase. Now, in that little sequence of a trade there, Charlie would have made, you can see the trades we just did, that was $87.50 in profit for that little series of trades. And so you can obviously understand that this is how the locals deal. You can see how easy it is to make some money, because all you're doing is getting across to something else for a quick reference. That's all the locals had. If you were in the bond pit, you were basically able to watch what was happening in the yen pit. If you were in the yen pit, you were able to watch what was happening in the bond pit. You'd be able to make buy and sell decisions. You had the big board in front of you. You were able to see what the Dow was doing. You were able to see what the S&P was doing. You were able to see what oil prices were doing for inflation. So you're able to look at the dollar, the three main markets, dollar, the dollar itself against the yen, probably the yen would be the most obvious, that most people use, because that was the big carry trade, remember, in the day, was the yen against pretty much anything else. So the yen against anything, the equity markets, whether they were bullish or bearish, and oil markets for commodities, for the commodity space. And they were able to trade those ideas on an active, aggressive basis as a local. And you should be able to do that as well. You just make a decision. You've got to have the confidence. And I think what, forgive me if I'm misquoting Charlie in any way, shape, or form, but I think what Charlie was probably most famous for was his projection. You might say, what? His projection. Charlie had the ability to shout very, very loud, apparently. had the ability to grab people's attention, had the ability to direct people to his business. He had a confidence about what he was doing, and he would get dealers or brokers coming to him to get fills, knowing that if he did some business with a broker, the broker would use him again and again, because the broker's not losing money. Remember, the broker's taking a phone order and they're just wanting it filled. And if, for a lot of locals, that was the best business on the planet, because the broker just wanted it filled. They were trying to get best price, but they would take a price. And if you were willing to give a broker who was trying to get 50 lots, if you were a broker and you were trying to get selling 50 at 3, for example, and you're not getting anybody buying, nobody's taking the trade off you, they've got still 50 to sell, you'd have somebody like Charlie coming in and saying, okay, you're selling 50 at 3, I'll buy 20 at 2. I'll buy 20 at 2. You're getting the price. But I mean, a lot of the times he would just take the 3s. He'd say, I'll take 20 at 2 for, so he takes 20 at 2 off him. And he just, obviously, what he's doing is he's doing the dealer a turn, right? He's doing the dealer a turn. Now, if he does the dealer a turn, guess what happens when a position goes against him? The dealer will do him a turn back. He'll give him a good price. He'll use some of the client positioning to do Charlie a turn. They'll help each other out a little bit, and he'll give him a better price. He'll let him out of a deal that perhaps he was maybe struggling with at some stage. And yes, of course, they struggle. They don't make money all the time. So this is what we've got to understand, is that in the pits, there was a lot of people helping each other out. And there was obviously some shysters that would do the opposite, and they didn't last very long because nobody dealt with them. But it's all about that idea of, I suppose the word that we've used in the room many times is confidence. You've got to have confidence to step in and do a bit of business immediately. Do a bit of business immediately. And that allows you to make some fast money decisions. You start thinking about, how am I going to play this? How am I going to play this market? So, for example, even if you want to do exercises, if you want to practice exercises, get your euro contract open, and then just watch your dollar yen. And if the dollar yen's falling, then try and bid some euros. Try and actually pay, I don't know what the current price. Pay 34 for some euros just now. Pay some 34s for your euros, and try and capture 34s. And if you don't get filled at 34s, maybe pay 35s for some euros. Maybe a single contract, or pay 35 for 2, or pay 35 for 3. It doesn't make any difference. So what you're trying to do is you're trying to just have the confidence that you can get in and out of trades without any trouble. It's not a problem for you to do any business. And all you're trying to do is you're trying to capture the trade itself as a local using something else as a narrative. And I've just paid 34 for 2 on the euro there. And, we're trying to get 34.5 on the flip at the moment, and we've managed to get some the trade off and closed it. So we managed to do okay in that little bit of business. So when we start to understand this, we start to see, for example, the dollar dropping down, and we start saying, okay, how do I make any money out of this little position? How do I advance my trade against what the dollar's doing globally or whatever? Then that's what you're trying to do as a local, isn't it? That's all you're trying to do as a local, is have confidence that the position that you're building is the right position, and up to your limit is what you're trying to do. You're trying to get up to your limit on a good trade inside of these little flips. Now, if you flip it straight away, so you sell, for example, you sell 20 at 3 and you pay that 2 for 20. So you're basically a market maker, aren't you? If you're selling 20 at 3 and you're paying 2 for 20 contracts, all you're doing is taking a tick out of the deal. You're just trying to take a tick out of that trade, and that's all you're happy with. You're happy with that. You're just basically a market maker in that situation, aren't you? So that little buy trade, I ended up buying some euros down to an average price of 31s there, and it's now 35s. It's now 35s. So we've made another bit of profit on that bit of business, haven't we? We've made another bit of profit on that little bit of business right there. So you can play about with these, can't you? You can muck about with these ideas, and all you've got to try and do is have the confidence to know what you think you want to be doing, have the confidence to then do it, execute it, and don't give a shit what anybody else thinks. It's your trade, it's your shout. Make your money or not. It's up to you. I've just taken another trade there. It's just went up $43. I only got a single contract in it, so I'll flip that out and I'll take the money. And practice. It's amazing when you practice these things, how you can end up developing out a little bit of profit and loss. Now, that profit and loss now was about $250 since I just was doing a little exercise, just mucking about. $250. We'll do that as a little practice on its own, guys, later on today. So we'll do it as a little practice later on, and you can get a euro-dollar account open and just practice being a dealer. Practice being, the local. Just using one piece of information, one single solitary piece of information. And we'll do that as we go into the afternoon session here. We'll obviously wait for the cash open to get out the way because in fact, we might actually do it before the cash open because after the cash open, we might do a little bit more. So maybe start at 2 o'clock. We'll maybe do a 20-minute session on the euro, purely the euro, and take on the role of Charlie, right? Take on the role of Charlie, trading in the euro. I know it's not the bonds, but take on the role of Charlie trading just in the euro pit. We'll try it at 2 o'clock.